What we're doing today is really just introducing you to some tax advantage accounts and ones that we're using personally in our lives. And we want to just make you aware there are other options out there and how do they fit into kind of the overall structure of your life, right? Everyone's life is different. Your needs and opportunities are unique. So we want to kind of make you guys aware of some other opportunities that are out there.
Absolutely. Absolutely. And like Jeremy, right? Growing, learning from people who have been doing this for almost half a century. This comes from people who are experts as tax strategists that I've learned these things from and just getting clearer all the time. Like every time I go and I start listening, Jeremy, to people talking about taxes, writing walls and numbers, my brain kind of shuts off. But then when I start thinking about how hard we work in our business, we're out there, it's like having a child. You're really putting everything you have into it. You're always looking to get better. You're looking to serve your clients more. I think one of the big places is just if you have kids that are under 18 and you're a business owner, getting your kids on payroll. Welcome back to another episode of WealthWise Banking. I'm Jason Sipple down here and very warm, like it is everywhere in the world right now, Florida. And I'm with my favorite co-host, Jeremy Lee Huggins. How are you, Huggy?
Doing well. I'm in Boston today and it's 83 degrees. So it's nice to get out of that Florida heat for a bit.
Very nice, very nice. I like the digs where you're at. Looks nice. I know you're there because of your ability to help people with what we're talking to people about every week. So congratulations on being up there and everything that's going on in your life. I know the impact you're making is super important to you, and I'm grateful to be on the journey with you, brother.
Yeah, no, it's great. Yeah. The award ceremony last night was pretty awesome. I'm looking forward to continue to build these relationships and connections. So for those of you guys who don't know, there's a lot of uh, fortunate opportunities for us to kind of come together with other leaders in this space and brainstorm to see kind of like how they're benefiting their members and what could we be thinking, differently. And just having the opportunity, like one of the gentlemen, he's been doing this for 37 years, Jason, 37 years. And having that wealth of knowledge to be able to sit down, have dinner with these people, talk about their life experience, how they've seen and integrated these sort of strategies for over, one third of a decade or a century, right? Like it's pretty impressive. So it's been quite the opportunity to continue to learn, to bring value to our members. And that's exactly what I look at it as. It's an opportunity to continue to grow.
I love that. And if we're not growing, we're what? We're dying, right? We're dying. So I saw you're taking a sip. So uh, if we're not growing, we're dying. And I love the mindset there. And what we're bringing, what we're going to talk about today, is something that we, Patty and I, are using in our business. But there's always opportunity, even if you're doing something, to do it better. And so, like, as we learn, like Jeremy said, as we connect with people who have been doing this for longer or people that are experts in other parts of not necessarily banking, but other parts of keeping your wealth, keeping more of your wealth. Because we all know it's not a matter of how much money can you make, it's really how much can you keep. And so today's focus is going to be how can you keep more of your money and how can you involve the next generation to be set up better than we were when we got started.
Yeah, so let's rock and roll, man. Like I know this is kind of near and dear to your heart because you have children. So, just as a caveat for our listeners, this is not going to be a big deep dive, right? This is basically going to be an introduction. If you want to have kind of a bigger deep dive on kind of the tactics and strategies we're talking about today, that's where I would encourage you. Go to wealthwisebanking.com. You'll be able to set an appointment with us. But what we're doing today is really just introducing you to some tax advantage accounts and ones that we're using personally in our lives. And we want to just make you aware there are other options out there and how do they fit into kind of the overall structure of your life, right? Everyone's life is different. Your needs and opportunities are unique. So we want to kind of make you guys aware of some other opportunities that are out there.
Absolutely. Absolutely. And like Jeremy, right, growing, learning from people who have been doing this for almost half a century. This comes from people who are experts as tax strategists that I've learned these things from and just getting clearer all the time. Like every time I go and I start listening, Jeremy, to people talking about taxes, writing walls and numbers, like my brain, like you know me, my brain kind of shuts off. But then when I start thinking about how hard we work in our business, like for all of our builders listening, how hard do we work on our business? We're out there, it's like having a child. You're really putting everything you have into it. You're always looking to get better. You're looking to serve your clients more. And so I think one of the big places, big optimizations for business we start right out before we get into the tax advantage accounts is just if you have kids that are under 18 and you're a business owner, this is for our business owners, or even if you're a W-2 employee, but you have a side business that you're running, depending on the structure of the business, getting your kids on payroll, right? As of 2026, right? We're not giving tax advice, we're not giving financial advice, but as of 2026, business owners can pay their children $16,100 a year, and that's tax-free income to your child, which ends up being a tax deduction directly for your business. And there's some caveats to that. I know Jeremy's about to jump in, but there's some caveats. One of the things I really took away is like if you have a 6 month old, you're probably not paying your six month old $16,100 because you take a couple pictures of them and you post it on social media and you say that's a fair wage for what they do in the business. I think it's age appropriate. You want to write it, you want to document, and you want to make sure that you're actually paying your children this amount of money. So that's just a little caveat there I learned. So
Yeah, yeah, you definitely want to make sure that they are for the skill set and abilities, the income that they're generating is appropriate, right? Like what we're going to be recommending is basically how to continue to use the tax strategy in a lawful and legal way. And to Jason's point, one of those ways that you can help basically redirect more money from your left hand to your right hand in a legal way is to pay your kids, right? If you have children, if you're a business owner, small business, large business, entrepreneurial mindset and you're just starting out, or you've been in business for a while, paying your kids is actually very helpful. It's very profitable. So, Jason, tell a little bit more about how you and Patty are doing that with Connor.
yeah, no, thanks for asking. We weren't until recently. This is the first year Connor is on payroll. So we got the second part of this, like we did things in reverse, just putting it out there in the world so you don't have to feel like you got to do it perfect. But what we're doing is we're paying Connor $10,000 from our business. Like he's an employee of our business and he's paid and he does things. He's putting out content and videos. He's also editing videos. He actually speaks. He's done a couple events where he speaks and introduces me. So we're putting him on, giving him a stage and a microphone and having him learn the process and then share his journey. And we're paying him to do that. So we're paying him to learn the business and share his perspective. And that's a fair and reasonable wage. And we document everything. So
And why is that a tax benefit to you to be paying your child $10,000 a year?
because that $10,000 is it's a deduction directly to our business, right? So we're
Yeah.
paying Connor tax free and we can take that from our earned income and write that off.
Yeah, so really, to not mix words and stuff here, what Jason's doing is he's has business revenue that's coming in. He's going to be paying taxes on it unless he can redirect some of those dollars elsewhere to reduce the overall taxable income that he has. What he's effectively doing is he's paying his son $10,000 per year. Connor's not 18. Connor's not paying taxes. So Jason and Patty are actually keeping an additional $10,000 of their family's wealth in the family rather than paying taxes on that 10K. That's effectively what you're doing.
Yes,
Okay.
100%. Thank you for making that clear if I wasn't clear, because that happens here. And Jeremy, by the way, I know the listeners on our podcast can't see it, but that's a heck of a ring, brother. I just got to mention it. Like, is that part of the awards or something? Like, I've never seen that thing. You look like a godfather with that thing on.
It's my West Point ring.
Okay, okay. Just checking, because I haven't seen that before. You look pretty serious. Like if you had a couple more of those on, I'd be wondering who I'm mixed up with at this point. So
Fair enough. Fair enough. No, so kind of getting back on track here for a moment. The account though, so when you guys are paying him 10K, Jason, where are you paying him in a checking account? You paying him um in a Roth and an IRA? Are you paying him in a Coverdell? What accounts? Are you paying him in one of our favorite strategies? And is it going to pay his annual premium deposits for his policies? Like, what are you
yeah,
doing?
let's get in that. So first we're paying him, right? It goes from our business checking to another account that we have, right? So we're paying him like actually $10,000. So he gets paid for the things he does. And then we're taking that money and we're using the strategy of that is how we're funding his specially engineered policy. We call our fund and future policy. That is how he just got the computer. Like we've done episodes on that. Like that's how he just purchased his computer and now he has a strategy to pay the loan back. So it's going multiple levels deep. And the reason Jeremy and I wanted to bring this to all of our builders in our community is because we have a tendency, like if we save that $10,000, if you go to the common way of doing things, that ends up just being money that you've kept and you go out and spend on lifestyle. And when we're saying that there's a better use for that, there's an intentional way to build something for the future. And there's several different accounts we're going to talk about. We choose to do fund and future, putting it in our uh, specially engineered whole life or privatized banking for Connor, his system, because I feel like that is a service to every stage of Connor's life, whatever he's trying to finance, whether it's first computer, first car, and so on and so forth, right?
So a couple of different strategies, because this is one of the things, kind of working with the family offices that I've done and business with and worked with over the last year. I hear a lot about these accounts, right? So let's just kind of list out common places that people put stuff. First and foremost is an account that everyone's very familiar with. It's a checking account. Like you literally just pay your kid directly to a checking account. Another one would be what's called a CISA. It's more commonly known as a, like if you really want to spell out the acronym, as a Coverdell Educational Savings Account. The pros and cons of that is you can take investments and potentially continue growing them on a tax-deferred basis, but you got to be very clear. This is money that you're going to be using specifically for an education
Education.
purpose.
Yep.
All right. And here's the other thing that's associated with it. The maximum annual contribution for a CISA is going to be $2,000 for joint fathers, and it's based on your modified gross income. So you can actually step that down and not get a full $2,000 benefit based on your income, right? So if you're between 190 to 220K or anything above 220K, that's when we're looking at adjusting that. So you're paying 10K to Connor. You could do up to $2,000 into a Coverdell account, a CISA account, and that would give him the ability to use it. Another account that's commonly used would be an IRA, right? We really want to start kind of getting some of these retirement accounts early because we know a lifetime of compounding tax-free inside of like a Roth is very beneficial. That's a strategy that many families will use. The one account that Jason and Patty and I personally would probably be using as well is be using it for my premium deposits in the whole life side of the house. Why? It's not an investment. What we're doing is a both and strategy with that. We're trying to create
Yes.
lifetime compounding growth with dividends, but also let's not overlook the fact that this is life insurance. And when we start layering the trust that Patty and Jason have, what they're really doing is setting up their great great grandchildren with tax-free generational wealth. So you don't have to go all in on one strategy. I want you to know you could use checking accounts, Coverdells, 529s, Roth accounts, premium deposits. You can segregate these into silos. The main thing is get it out of your business so you're not paying the taxes on the 10K. And then based on your individualized strategy, figure out which one's the right choice for you.
Yeah, and your future goals, and beautifully said, and your future goals for your family. Like I was thinking about, okay, as Connor gets older and we potentially pay him more from the business, where would the additional money go? Would I put it into additional paid up additions if I could, right? There's room, or maybe I was thinking we'll put it into a Roth, right? I was doing some of the math and just, you make a one-time $7,500 contribution, which is the max for a Roth in 2026. And over 50 years, if it had compounded at 8%, which is what, the common thinking will tell you, that'd be like over $350,000 50 years from now by the time Connor's 61. So there's a way to start setting him up, like his future self up for success by just knowing long-term thinking and the time value of money over time.
Yeah, and I'm with Jason. I'm not all in on one particular strategy, right? I have self-directed accounts. I have a Roth IRA. I lend out of it. I don't have a traditional IRA that I throw into the stock market. No, I lend it for real estate. That's what I do. And I recapture all those gains tax-free. That's an incredible compounding growth engine that also produces tax benefits. Ideally, what you want to do is you want your assets to fund your assets. Your assets fund your assets while building a long-term generational wealth, via the death benefit. People underestimate the value of that death benefit. But when that comes back to your family tax-free, again, and you structure it out with the proper trust structures, then we're building long-term compounding generational wealth. Now, I could have money in a Roth account. I could have it in real estate. I could have it in crypto, right? If all of them just shit the bed and go to zero, I can still pass on generational wealth via the policies. We just want to make sure that Connor has access to that for opportunities and emergencies throughout his lifetime. The
Yes.
Coverdell, as an example, can only be used for education. 529 plans, education, right? The Roth account, he can only access when he's 59 and a half. There are certain IRS restrictions around these. There are massive benefits to them. At the same time, there's massive benefits to the policies when used for opportunities and emergencies. So what we're doing is we're creating silos. Everyone's little picture and how it all fits together is based on your family structure.
And what you just said too is, and this is why we love what we talk about the most, right? But we also know that it's just a tool. Like when we're talking about whole life that is engineered for the living benefits, we're talking about something that you can use at every age that you're at for, like you said, urgencies, emergencies, or even a and both asset, right? You have it as a asset that you're building up the liquidity to go do something with. Like you could take that money, you can put it in a Roth, right? You could start doing it and both that way. And that's why I kind of came up with our plan, because I know very wealthy business owners who have policies and they're splitting the money between policies and Roths for their kids. I also know business owners who just want to put it in Roths and they don't believe in having this fund because they're like, oh, I can make so much more in this fund. And I'm like, well, what's going to happen at every stage along the way when there are needs for liquidity, right? When you do need a line of credit, who are you going to borrow from? Where's that money going to come from? So,
Yeah. You nailed it, right? High cash value life insurance, to be very clear, because we had someone put this in a comment, is not an investment. We don't espouse of treating it like an investment at all. Um, it is a bridge between saving and investing. It is a both and strategy. The high cash value life insurance solves, when built for living benefits, solves a family's capital needs. It's a capital need problem. Okay. When you have banks during events like COVID and they shut down your business lines of credit, when they deny access to your banking systems, right? When private lenders disappear, you can always go to the cash value and policy for urgencies, for emergencies, for opportunities. It also, because the wrapper is life insurance, let's not overlook that that death benefit means something. And we're looking at long-term planning, kind of changing what it is to be a Sipple, to be a Huggins, to be your last name, right? That passing on tax-free, that's powerful. So we don't espouse it as an investment at all. What we do is we say it's for your capital, your family capital. I like to think of it, Jason, as a personal line of credit. To
yeah, I
me,
do
it's a
too.
personal line of credit that I can tap into for opportunities and emergencies.
Beautifully said. And as we said, we're just doing a high level today because we could go in so many directions. We'll bring more case studies. We'll talk more about what we're doing in future episodes because this is just one of many powerful strategies that we're going to be talking to you about on a weekly basis, right? This is why we do this. This is why Jeremy and I came together. So we're like, hey, brother, we're both going to keep learning. We know we don't know everything there is to know, but you know how it'll go faster if we both go out there on our own, put ourselves in rooms with people who have been doing this for a long time, find out what the wealthy are doing. Because at the end of the day, the reason that, Elon didn't pay any taxes in 2018 isn't because he's got loopholes. It's because he has people who understand the nuance and the strategies that are actually available to all of us, right, Jeremy? So it's really just understanding how can you keep more of your money, like you said, move it from your left hand to your right hand, but also set your kids up for future success. So if you heard anything that resonates, if you want to talk about how this will fit into your life, go ahead and go to wealthwisebanking.com and schedule your strategy session with Jeremy or myself. Jeremy, you're already in banking.
You're just not the banker yet.
Awesome. So be blessed. See all of you next week. Keep learning, keep growing, and we'll see you soon. Thanks for joining us on WealthWise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together, We're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control, and keep building your legacy the wise way.